Well done. Thank you. Thank you very much. Asante sana.
Thank you.
Thank you. Congratulations. Well done. Congratulations. Keep up the good work.
I would like to thank you, Honorable Deputy Prime Minister and Minister for Finance, for making time for us to present to you the dividend payment due to the Government of Kenya as our anchor shareholder for the year 2010. The Treasury today receives Kenya shillings 654,500,000 Kenya shillings as dividend from its investment in KCB.
Mr. Minister, sometimes when I come to town, I see these Kenyans, mighty Kenyans running all the way to the foothills of Gong Hills. They go out and make a name for this country. And Mr. Minister, there is no reason why, even in the corporate world, we cannot also demonstrate to the world that we can also provide an environment where international investors recognize that Kenya is the point, is the destination that they should come to put their money into.
I begin today and say that we are indeed happy to note and to receive the honorable gentlemen and ladies who are here today, who are here to deliver and for us to receive dividends from their two institutions. I personally am delighted to note the contribution that both these institutions are making towards both our economic development and our economic growth. As you will recall, I directed during my 2009-2010 budget speech that all regulatory authorities submit 90% of their surpluses to the Treasury and retain 10% to build on their reserves. Today, I am happy to receive a check of Kenya shillings 77.6 million being surplus funds from the Capital Markets Authority for the financial year 2009-2010. I also note with appreciation that during the years 2008 and 2009, the Treasury did receive a cumulative dividend payment amounting to Kenya shillings 1,194,973,758 from these two institutions. And actually, of course, the bulk of this money, amounting to 1,047,200,000, was received from Kenya Commercial Bank, which is a commercial institution. Indeed, it is worth noting that even at the height of the global financial crisis, and at a time when our country was recovering from the effects of the post-election violence, you were both able to contribute to government revenue. I am happy to receive a further Kenya shillings 654,500,000 being dividend for the year 2010 from the Kenya Commercial Bank. We are also pleased to note that Kenya Commercial Bank continues to be an important partner in national development through its 160 branches. Financial access to Kenyans has improved, with about 40% of our people now having access to formal financial services, up from 25% 5 years ago. Innovative financial products and services are expanding financial access, helped by mobile banking and widespread penetration of mobile phones. While we have made great strides to deepen our financial sector, we remain concerned going forward about the high lending rates and the spread that investors face. I am therefore taking this opportunity once again to challenge the banking sector to come up with strategies that will further help to lower the cost of credit without compromising on a fair return to their shareholders. Several tax incentives and interventions to address impediments to market growth have been implemented by the government. In addition, relevant institutional reforms have also been initiated to enable the capital markets play its role in mobilizing financial resources for economic development. The Nairobi Stock Exchange is a critical institution for the government which has to date borrowed close to Kenya shillings 800 billion through the capital markets since the first treasury bond was issued and listed at the Nairobi Stock Exchange in 1997. Further, the government is also keen to fully implement the privatization program. The demutualization process has as its hallmark the following key outputs which we expect to see implemented by the Nairobi Stock Exchange: the introduction of transparent and effective government structures, promotion of increased efficiency driven by open competition and guided by robust conduct of business and governance regimes, the building of strong and independent management structures capable of ensuring compliance through effective supervision and enforcement, the investment in critical infrastructure and human capital to ensure that the exchange is able to compete at the highest levels and thereby attract wider ownership and potential mergers to grow its market presence. Again, in addition, you will recall in my budget speech this year, I proposed a number of reform measures to support the growth of our capital markets. Key amongst these are to exempt real estate investment trusts from corporation and withholding tax for issuers and investors respectively, to amend the Capital Markets Act to facilitate the trading of listed fixed income securities over the counter, to establish a futures exchange market, and to strengthen the supervisory powers over the central securities depositories, amongst other measures. Looking forward, our economic reforms are expected to remain on track. The government is committed to achieving and maintaining low levels of inflation and low, stable, reasonable interest rates to spur savings as an essential part in our mobilization of resources for long-term investments. Finally, ladies and gentlemen, I once again wish to commend the boards and management of the Capital Markets Authority and the Kenya Commercial Bank for their exemplary performance. I am sure all Kenyans on whose behalf the Treasury is receiving these checks are indeed proud of you, and we thank you for the dividend checks and wish you the best of luck in your operations in the forthcoming year, and also to assure you that these funds will indeed be put to good use.